Verizon pays a monster dividend. The telecom giant dividend yield is 6.7%, which is several times above the S&P's 500 1.4% dividend yield. Verizon reported a mixed quarter one earnings with revenues slightly below expectations, but strong customer additions were shown and cost controls were demonstrated. Also, the company is embracing AI and has new partnership with NFL and NHL. Despite the debt burden, the dividend is well covered and Verizon is on track for a strong free cash flow this year in 2024. So if you are interested in Verizon investment for a strong, sustainable, healthy and secure dividend and growth, then please stick to this video until the end. Let's get started. Hello everyone and welcome back to my channel. My name is Pankaj and I am a financial investing advisor. Thank you again for joining me today. As always, everything shared in this video is for informational purposes only. But if you hit that like button below, that would be a huge contribution in the growth of this channel. On one hand, a high dividend yield is often a warning sign that the payout is at a higher risk of getting cut if market conditions turn bad. However, that couldn't be further from the truth for Verizon's healthy and secure dividend. Verizon has continuously paid dividends for years well above 4%. Moreover, its dividend growth is astounding, well over 2%. That's one of the many reasons it is great time to invest in Verizon for secure and healthy dividend income. And its current low stock price makes more sense. It is one of the big time dividend stocks. Verizon's financial numbers continue to get better. Verizon has spent the past several years investing in its network, including building out its faster 5G capabilities. That heavy investment phase is now in the backseat, enabling the company to generate more free cash flow. It produced $2.7 billion in free cash flow during the first quarter, an improvement of $400 million year over year. Dividend payout cost is estimated to be $2.8 billion. While free cash flow in the quarter didn't cover Verizon dividend payout of $2.8 billion. That's not a concern because it's a seasonally low period for the telecom giant. Quarter one is always a low period for telecommunications. Verizon expects its free cash flow to build throughout the year in 2024. Last year, the company produced $18.7 billion in free cash flow, easily covering its $11 billion dividend expenses which was committed. Verizon CEO stated in last week's earnings conference call that Verizon's strong and growing free cash flow supports both our dividend and a stronger balance sheet. This gives us greater flexibility to accelerate deleveraging throughout the second half of the year, bringing us closer to our long-term leverage target. The company ended the first quarter with a leverage ratio of 2.6, an improvement from 2.7 in the year-ago period. That brings it one step closer to its long-term target of 1.75 leverage ratio from 2, which it aims to achieve next year. The company's solid and improving leverage ratio brings it back to A-rated credit. Why we say the dividend is healthy and secure for Verizon? Verizon CEO said in the first quarter call that Verizon is improving free cash flow and a strengthening balance sheet. That's why its dividend is healthy and secure. Meanwhile, with its free cash flow, dividend payout ratio is also continuing to improve. Verizon's payout is steadily growing stronger. That will continue putting the company in a position to increase its dividend, which has done for a sector-leading 17 straight years. While the company's dividend growth has been modest in recent years and less than 2% in late 2023, it's still rising. That's better than rival AT&T, which cut its dividend a few years ago and hasn't increased after that. Some of the few reasons why the investor should buy this stock now. Number one is Verizon is improving financial profile and growing its dividend and dividend payout ratio. Number two is the company trades an extremely cheap valuation. Verizon trades at a more than 50% discount to the S&P 500. That low valuation is the reason Verizon has such a high dividend yield. Number three is Verizon could soon be in the position to capitalize on its disconnect by starting to repurchase its dirt cheap shares. The company wants to get leverage closer to its target range before resuming share repurchases. That could happen next year. Buying back shares would help boost its earning per share and its valuation. To conclude, why Verizon should be considered a good stock for dividend payout. Number one is Verizon's free cash flow and leverage ratio are improving. Number two, those features makes its high-yielding dividend healthy and secure. Number 3, Verizon currently offers a big-time dividend yield primarily because of its low valuation. Number 4, the company could soon be in the position to start repurchasing some of its cheaper stocks. Number 5, that combination of a sustainable income stream with an upside catalyst should motivate investors like me to buy this stock while they remain cheap. If you found this information valuable, Don't forget to like, share and subscribe for more financial insights. Until next time, happy investing.